So in the past 24 hours, Bitcoin and the SP 500 have wiped out all of the gains they've made in the past week. Bitcoin has just come down and filled a new CME gap. So what's the next move for these markets? I want to quickly update the SP 500 and then we will dive into Bitcoin and what's happening in the news. So just a quick rundown on the SP 500 in the macro. We've obviously been talking about this massive resistance at 4,200. This is a huge gamma level in the options market. Gamma meaning this is where there is a lot of centralized open interest. There's a lot of volume happening around these specific strike prices at the 4,200 call wall. This has been a major level of resistance for the S&P 500. And since my last video, we have seen a material weakening in the call wall, dropping from 4,220 down to 4,190. So the call wall was looking like it's materially weakening right now. We've seen this 4,200 level act as a major level of resistance for the past year or so for the S&P 500. So it is looking like the S&P 500 is setting up for a nasty move back down to the downside. You can see also on the S&P 500 on the daily time frame, we do have a brutal bearish engulfing candle. And like I've been saying on the channel, while we have had a throw over from this picture perfect asymmetrical triangle, I do believe this is just going to be a throw over before we do start heading down to lower valuations such as the 200-week moving average, approximately around about 3,900. Now, in terms of what's happening over in the DXY, first of all, if we're looking at this chart on the S&P 500, you know, if you watch the channel, we've been looking at these fib channel parallelograms. First of all, we looked at this one developing on the DXY, and we placed this same fib channel parallelogram over on the S&P 500. They're obviously back to back or inverted because, as we know, S&P 500 and DXY typically move inverse to each other. So the DXY, just a quick update on the daily, you can see right now that we are taking a huge tear to the upside. I'm going to show you what these green support boxes are in just one moment, but we've basically torn through all of the major fib levels to the upside right now. If we come over to the S&P 500, you can obviously see the inverse of this, like we talked about over on the asymmetrical triangle, running into this gamma level on the call wall. We believe this is a throw over, and we're going to start solidifying a rejection. For the DXY, I expect continuation back up. For the S&P 500, I expect this to be a throw over and get continuation back down. Now, one thing we've also been looking at in terms of the S&P 500 and the DXY is, like I said, we've been looking at these fib channel parallelograms, but as you know, the DXY and the S&P 500 are inversely correlated. So if we just simply invert the DXY and look at a linear relationship between the S&P 500 and the DXY, DXY tops out before the S&P 500, it bottoms out before the S&P 500, it tops out before the S&P 500. It is a leading indicator for the equity markets, and right now it is rushing, well, I was about to say it's rushing to the downside. We're looking at inverse DXY. Regular DXY is taking a tear to the upside. Inverse DXY is taking a tear to the downside. And as these have developed from the same fib channel parallelogram, you know, this is really a leading indicator to me that the S&P 500 is about to get a major move to the downside, especially since we've seen this material weakening over in the options call wall. And, you know, once again, this is looking like a picture perfect rejection from this massive 4,200 level. So that's really all I wanted to focus on in terms of the S&P 500. I do believe we are going to be moving to the downside, and specifically if we're focusing on the levels for the DXY, because within this same fib channel parallelogram, we've leveled up the highs and the lows and the highs, and it fits perfectly here. So if we are looking at a potential price target, 1.618 down here, obviously bear in mind, once again, this is the inverse, so this would potentially call for a move up to 108.45 for the DXY, while the DXY does continue on its tear. Now, just quickly, before we do move over onto Bitcoin, like I said, I did want to fly through the equity market analysis. There is one thing that I have noticed. I'm just going to quickly delete what is happening with these fib channels. First of all, the weekly time frame still has a little bit of room to move up over on the DXY, and the monthly, which is what I'm going to be focusing on in a minute. We're going to tie the DXY and Bitcoin analysis together in just one segment. This is why we finished off over on the DXY. First of all, the DXY monthly time frame looks like it's about to flip bullish and take a huge tear up. Every single time it's come to this level and started to flip back bullish, it has marked lows over in the DXY, and we've gone on huge parabolic rallies. Even if you're looking at, you know, these data points here where it was just a quick rally, these were all massive rallies for the DXY. And also, if we zoom out further, I believe it's over on this chart. Let's get rid of the stochastic RSI for now. I want to highlight, if we are looking at the immediate range, you can see that this has been a crystal clear resistance for the past, 98 months or 2,000, 3,000 days or so. If we come over to the 12-month time frame, you can see this has been resistance for about 8 years, and the DXY has just broken down and flipped it as support. But it doesn't end there. If we zoom out even further and come over to the 3-month time frame, you can see, this wasn't a particularly significant level back here, but there are definitely some data points that do align with this. In my opinion, the support and resistance box really started to come into fruition around about 87. From there, you can see a rejection from, what was previously rejection over here. We broke up to the upside, rejected from the top of this, had a quick swing failure pattern. If we come over to the monthly time frame as well, you'll really see what I mean. If I zoom in here, you can see, this was resistance, this was resistance, this was resistance. Once you broke above it, you back tested it, went on a massive rally. When you came back down, back tested it, fell through the floorboards, retested it. This was resistance, 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 like we've been talking about on the channel. And we are literally flipping this at this moment in time. In terms of the 12-month, like I said, this had a very, very strong level around about 87 or 88. This is a 36-year-old support/resistance box that the DXY has come down and back tested as support. So just an interesting thing to note. I do think the DXY, like I said before, is going to get continuation up to 108.45. So we just talked about the DXY on the higher time frames and discussed how, at least in my opinion, we're sitting at a monumental level of support and we're likely to get a big macro move back up to the upside. So previously at the start of the video, I said we tie the DXY into the Bitcoin analysis, and this is what I wanted to discuss with you. So as we all know, Bitcoin is predominantly inverse DXY, but I've been testing some of these common market phenomenons, such as, Bitcoin is inverse DXY, and also some things like people say when you get an interest rate cut, it's bullish. We back test these market phenomenons and, actually go and check out the data. We've previously debunked that interest rate cuts are bullish. They are actually bearish. However, one thing I wanted to touch on is the relationship between Bitcoin and the DXY. So a lot of people have probably noticed recently, especially day to day, sometimes it seems like the DXY does one thing and Bitcoin just does its own thing, or the SP 500 does one thing and Bitcoin just does its own thing, and everyone's like, wait a sec, I thought Bitcoin was inverse SP 500, or I thought Bitcoin was inverse DXY, etc, etc, etc. Nonetheless, what I've done is I've gone and done some correlation coefficient and regression analysis on Bitcoin and the DXY, and what I found is pretty interesting. If you are running a regression line on the weekly time frame for Bitcoin on the DXY, looking at the correlation between the two of them since 2018, you may be surprised to know they only have a negative correlation of 7.5%. Yes, there's lots of times where Bitcoin has gone up and the DXY has gone up. And on the flip side, there's been lots of times where the DXY has come down and Bitcoin has come down as well. And on the daily time frame, it's pretty much the same thing. If we are running some correlation coefficient analysis over on Bitcoin and the DXY, you can see it's not as much of an inverse correlationship as most people think. Yes, there is a average negative correlation of negative 16.5%, but there are so many times where Bitcoin and the DXY are positively correlated. Over here, they topped out at the same time. Over here, they topped out at the same time. Over here, they started breaking down at the same time. Over here, they rallied at the same time and they broke down at the same time. Like, there's so many data points over in the analysis that I've been looking at, which surprised me. I personally was also on the boat that Bitcoin was predominantly inverse DXY. However, on the daily time frame and weekly time frame, I mean, this isn't my opinion. This is based on mathematical statistics. You can't dispute this. I've gone through many different correlation coefficients, regression analysis. I've looked at different time frames. I've looked at Heikenashis. I've looked at daily, weekly, monthly, different time periods in Bitcoin, different standard deviations, linear, non-linear, the list goes on. What I've predominantly found is that if you are looking at lower time frame moves, Bitcoin and the DXY is not as correlated as most people think. However, like I said, in the macro, they are extremely correlated. You can see right now, we're pretty much sitting at an all-time high in terms of inverse correlation. So right now, there's a negative 81.13% correlation between Bitcoin and the DXY. So why do I highlight this? Well, once again, I'm talking about the macro DXY right now. On the monthly time frame, stock is ready to turn up. We're bouncing. We're literally bouncing from a huge support and resistance box, which has been support and resistance in numerous market occasions. And like we've been talking about, this has been solid resistance for the past 8 years. We've just backtested it and we are launching to the upside for the DXY right now. So to summarize my point on this, day-to-day moves on Bitcoin and the DXY are really not as linear as we thought they were. Weekly time frame as well, there is a pretty weak negative correlation, although the negative correlation is pretty much there on every single chart. It's just not as strong as a lot of people would have you believe. But like I said, looking at the monthly time frame, this is really where you see major correlation in the inverse DXY and Bitcoin. And right now the DXY is rocketing up, so it's no surprise to see that Bitcoin is breaking down. And this leads us into the final part of today's video. What is going on in Bitcoin right now? So before we talk about this chart, I do want to show you what I've been discussing on the channel as the most important Bitcoin chart. We've been discussing how Bitcoin is still sitting above the 200-week moving average. It's still sitting just above the weekly EMA ribbons. It's still sitting just above the bull market support bands, but it is getting rejected from this huge resistance box. It is getting absolutely squeezed, and the second that it breaks out of one of these ranges, it is going to have an absolutely major whiplash in whichever direction it breaks, in my opinion. Now, I've been presenting on the channel why I think that we go down for one last low for Bitcoin. The last level of support on the bull market support bands and EMA ribbons are at 25,600 over on Bitcoin. We also are coming down at this very moment in time down to the 200-week moving average at 26,400. So this is where I wanted to come back into the next chart and talk about my price target in the immediate short term. If we do look at this fib channel parallelogram, we did have that bounce over the weekend like we predicted in the last video. If you did watch this video, debt data and divergences, we talked about a few different factors such as the stochastic RSI, which were turning up. So if you do come over to this section, you can see it was timestamp Bitcoin pump incoming. We bounced up to 28,000, and now I am flipping back bearish. While we were short-term bullish in the last video, we reverted back into major resistance, and now I am flipping bearish. Obviously macro, nothing had changed for me at that point. We were just predicting a short-term bounce. That has already happened. My price target right now is 26,400. This is the 200-week moving average. This is also coming down to the next fib channel level at the 382 Fibonacci. If we break the floorboards of that, 25,500. We've also identified many different price targets on the channel which are in correlation with this. The mini CME gap at 24,900, head and shoulders the next level down 23,400, CME gaps to the downside at 20,300, BART price target down at 20,000. And if we come over to the 4-hour time frame, we obviously rallied over the weekend and we have retested that CME gap, and we have just filled it in the past 4 hours or so. So like I always say on the channel, don't fade these CME gaps. At some point in time, all of the CME gaps get filled. I think on average, only a few of them back down at much lower price targets haven't filled, but I think we're coming back down to this mini CME gap down at 24,500. 25,000 is really a massive level that I've got my eyes on in the immediate short term. So for Bitcoin, we're turning down. That's my prediction. In the immediate short term, in the next few days, 26,400. Then we come down to 25,000. And if we lose 25,600 and start putting weekly candle body closes beneath the 200-week moving average, beneath the EMA ribbons, beneath the bull market support bands, that is going to be cause for concern as we break back down into new lows, in my opinion. Now, I don't think I've covered this before. I did also just want to really quickly highlight that in terms of from the swing low to the swing high, we have, wrong fib, just got rejected from the 618 Fibonacci in the macro. Like we talked about in the most recent video, one of the reasons why we were short-term bullish is the fact that the daily stochastic RSI was starting to turn up a bit, and that daily stock reset has been complete. Like we said, we were short-term bullish. This doesn't change anything in higher time frames. We did say in the lower time frames we might get a little bit of a bounce, but the weekly stochastic RSI is going to continue breaking down for some weeks to come, and that is exactly what I am still predicting. I still think we've got a decent amount of room to move down for the Bitcoin stochastic RSI, and the same thing for the total cryptocurrency market cap and the altcoin market. Right now, the total cryptocurrency market cap has just been rejected from the 618 Fibonacci on the weekly time frame. We're falling beneath support on the bull market support bands, and we're heading right down to the bottom of the EMA ribbon. So the total cryptocurrency market cap, if we continue to break down only a few percent more, we are going to see a parabolic landslide. The total altcoin market cap as well is seeing the exact same picture, but as we've been discussing on the channel, the altcoin market is so much weaker than the total cryptocurrency market cap right now. We've already lost the bull market support bands. We've already lost the EMA ribbons. We're heading down to the 200-week moving average, and we're sitting at a critical trend line right now on the total altcoin market. This is why I've been predicting a altcoin annihilation season is right around the corner. We've got a few cryptocurrencies today absolutely biting the dust. KDA down 5%. I will provide a new update on this one soon because we are still in that trade. I also did just want to very quickly wrap up on the Bitcoin analysis. We have been looking at this regular bearish divergence on the channel. Now, we talked about this particular trend line right here. And, you know, as we've been discussing on the channel, this is finally starting to play out and we are starting to break to the downside. The reason why I think that we're about to get a major move to the downside is because we're no longer seeing the markets ignore the signs of these bearish divergences like we previously did. The markets before were rallying on low liquidity and a little bit of volume, and this is what allowed the price to keep on pushing higher and higher in these two individual situations. So you can see right here, there was a high, there was a higher high and a higher high, and the oscillator was making lower highs. Over here, you saw in this instance over here, we were making higher highs, the oscillator was making highs, lower highs. But right now, we're finally, for the first time, we're finally starting to see this regular bearish divergence really come into fruition. We're not seeing any divergences right now over on the daily. You're actually seeing the price making lower highs and the oscillator is making lower highs, unlike these past few breakdowns that have happened while we were forming this bearish divergence. So this is just one reason why I think that this bearish divergence has finally starting to see its days, and we are going to get a rocket to the downside where this divergence originated round about 21,400. Bear in mind the trend line is drawn to here, but you had your first high right down here and the oscillator started topping out round here on this peak before pushing up and going higher and higher while this went lower and lower. So there we go. From a technical perspective, that's what I wanted to update you on today. I think the DXY is bullish, the SP 500 is bearish, and once again Bitcoin, I think we are heading down for the next few weeks or so. In terms of new economic data, we don't really have much more data coming in for the next few weeks or so, other than the extremely important May job report, which will be wrapped up on Friday. I'll keep you up to date on that when we make a update this weekend. I will talk about that. Other than that though, other than at the end of the week, the next important economic data is coming in the next 2 weeks when we have our next FOMC decision. And interestingly enough, this is going to correlate somewhat well with the next options expiration, which will happen around about the 17th of June. So all in all, for the next 2 weeks or so, I kind of just expect a slow chop down, bleed out for these markets. And then, in my opinion, we're going to see another interest rate hike and things are going to get ugly from there. Other than this, the equity markets, Bitcoin, these are really breaking down. Obviously, they rallied over the weekend and they continued to break up on Sunday when we had that confirmation that in principle, Biden and McCarthy had agreed upon a debt ceiling deal, and that did really not go too well. We had lots of lawmakers come out and saying, I'm voting no on the debt ceiling. We also had GOP Rep Mace saying that they were voting no on the debt ceiling. We had quite a few different people coming out and saying they are voting no on the debt ceiling arrangement. Like we talked about in the most recent video on the channel, this agreement has only been made in principle and it has not been wrapped up and finalized yet. So it's not looking good. This is supposedly meant to be voted on today. However, you know, lawmakers, you know, Biden, they're all sometimes a little bit slow. So, you know, potentially this may drag out for a bit longer. But nonetheless, I'll keep you up to date over on Twitter if there are any developments. So make sure to follow me over at 618_cowboy. So yeah, that's all I've got for you today, my friends. If you enjoyed the content today, make sure to let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button and become a member today. Also, bear in mind, I'm going to be having an announcement on Saturday. There is a countdown over on my Twitter and my Discord. I have been posting these 4, 3, 2, 1. On Saturday, this will reach 0 and there will be an announcement made over on the channel and also on Twitter. So stay tuned for that. Make sure to keep notifications on. So all I've got for you today, my friends, it has been your boy Cowboy Trades. I'm out. Peace.